David is the Chief Scientific Advisor to Norcliffe Capital. Norcliffe Capital are one of Strathclyde's investment partners, and David is former Chief Medical Officer of Invitrogene Life Technologies, now known as Thermo Fisher. David has founded 2 biotech companies, Q1 Biotech and Q Outsource, which in total exited for, wait for it, $100 million. David was involved in the buyout of BioReliance, which was sold for $450 million to Sigma Aldrich. Previously, David was director of the Leukemia Research Fund's Virus Centre and Professor of Veterinary Virology at the University of Glasgow. David has received numerous awards for the impact of his work. Some of these are the Norman Hall Gold Medal for Research into Animal Diseases from the Royal College of Veterinary Surgeons, the Animal Health Trust's Award for Outstanding Scientific Achievement, and the British Veterinary Association's Cup and Medal for contributions to veterinary science. In 2006, he received an honorary doctorate from the University of Glasgow for services to biotechnology and veterinary medicine. David is a current and former member of several advisory groups, including the UK Advisory Committee on the Release of GMOs into the Environment, the FDA Xenotransplantation Advisory Committee, the World Health Organization's Expert Advisory Panel on Biological Standardisation, and the UK Medical Research Council STEM Foundation. David is very kindly going to round off our speaker sessions by looking at some of the groundbreaking innovations that have emerged from Strathclyde's entrepreneurial system and commenting on the role that the investment community, really important for entrepreneurship, plays in bringing these technologies to the world. Please join me now in welcoming Professor David Onions. We're going to listen to a presentation that David has prepared for us, and then we will move over to some Q&A. So thank you, Aidan. If you can roll the video, please.
An introduction. I thought it might be useful to share my experience both of starting companies in Scotland and now investing in them. We find Scotland an attractive location because its innovative culture has resulted in more university spin-outs than any other region of the United Kingdom. And as you've been hearing, there's a very supportive ecosystem, particularly the innovation centres that form a bridge between universities and the business sector. I've had dealings with 3 of them, and they've all been very positive experiences. For instance, here on the Isle of Man, I chair a government committee on the Internet of Things, and we form connections with the Census Innovation Centre, and that's resulted already in direct investment from the Isle of Man into a Scottish IoT startup. Strathclyde University is a beacon for innovation within Scotland. It was, of course, the UK's first technological university and the first university to win the coveted University of the Year award on 2 separate occasions. It's maintained that vision of its founder, John Anderson, as a place for the specialising in practical subjects for the good of mankind and the improvement of science. And that's important because whilst innovation drives economic growth, it's also the means by which we'll solve pressing problems of the day, like climate change, access to healthcare, and global inequalities. Scotland also has a very robust investment environment. It ranges from seed funds available from angel investors like EOS and Archangel, through to technology funds that are very active in Scotland like Mercia, Park Capital, Kelvin Capital, and others, through to VC companies like Norcliffe, which will direct funds into specific companies rather than into a fund. All of these are supported by matching funds from the Scottish Investment Bank and from innovation grants, and these form another important part of the ecosystem. Most of the funds coming into Scottish startups come from the Enterprise Investment Scheme and to a certain extent from the pension funds. In the past, EU cash has been available, but that is now drying up post-Brexit. but family offices are showing an increasing interest in Scotland because of the technological richness of its universities. There are some threats to this funding scheme. The main threat might be a change to the government EIS scheme itself, although fortunately that hasn't happened yet. There could be a market correction in 2021, in fact that's quite likely, and that will have some impact. But the underlying point is there's still a high demand for high quality, innovative technology companies. And the reasons for that are quite clear. Most companies fail in their first 3 years, 60% fail in fact. But high technology companies have a much higher survival rate and a much higher return for their investors. Nevertheless, 2020 was, of course, a challenging year. But the Scottish Enterprise reported that the Scottish Investment Bank had put 78 million in direct investment into startups and had secured another 400 plus million to support the Scottish economy. The Scotsman reported really a quite dramatic downturn in the first quarter in venture capital funding in Scotland, down 66%. That didn't quite accord with our experience in the UK-wide environment. We were funding companies at the 6 million mark reasonably comfortably in the first quarter of the year. But certainly there was a slowdown in the later part of the year. We had a fall of 30% reported by the Enterprise Investment Association. And indeed, there's a huge gap reported by the Leeds Business School for the total gap between requirements and funds available in the UK. Nearly all of our companies exit usually to a trade sale, primarily to a US company. There are some exceptions to this. For instance, we have a company, Bioceptor, that was started by a Nobel Prize winner, Sir Greg Winter, and that's probably destined to become a unicorn company. That's a company that's going to float on NASDAQ for over $1 billion. But it does show a dependence in the UK on US capital markets. And I think the UK needs to consider whether we need a NASDAQ equivalent, because the AIM market doesn't quite fulfill that need. Finally, I want to show how these elements of the ecosystem have resulted in some really interesting projects coming out of Strathclyde University. And the first of these is ClinSpecs Diagnostics, a spin-out started by Dr. Matt Baker, supported by Holly Butler and David Palmer. And recently, they've recruited a very successful CEO in Mark Hegarty. ClinSpec have a truly disruptive technology. They can diagnose cancer on a blood sample, or more accurately, they can diagnose it on a serum sample that's dried onto a slide like this, put into an infrared spectrometer, the spectrum read, and then analyzed by a machine learning algorithm that assigns a probability of whether or not that patient has cancer. The system can be put high in the diagnostic pathway and informs whether that patient should go on to more intensive investigation. It's competitive with new molecular methods like detection of circulating DNA. It's also based on strong published clinical information. And there's a viable health economic case for implementing this technology in the NHS or indeed any other health service. So this company has the attributes that we really like. It's a disruptive technology. It's in a global market and a growing market. And it's strongly protected by patents. And I must congratulate Strathclyde University because they have a very robust attitude to protecting the IP coming out of the university. I think ClinSpec Diagnostics is going to be a highly successful company. And I think that is true also of this company, Orium Diagnostics, although actually it's not yet a company. I hope in the next few weeks, working with Strathclyde, it will be a legal entity. It again is founded on award-winning research, this time from Dr. Damien Corrigan. Damien has spent his career developing rapid and cheap electrochemical sensors for the diagnosis of life-threatening conditions. The technology depends on a gold element, which is functionalized with a chemical, and that chemical in turn allows an ACE2 receptor, that's a protein which is the receptor for the SARS coronavirus 2, to be bound to that element. If a virus comes along, the spike protein binds to the ACE2 receptor. That alters the electrochemical impedance of the sensor, and that in turn can be interpreted as the virus binding. This technology is interesting not simply for COVID, but because it's a disruptive platform technology that replaces rapid but inaccurate lateral flow tests. They have an accuracy of up to 40%. But it also replaces accurate but slow and expensive central lab tests. So this technology is ideally suited for point-of-care applications that are time sensitive. And an example of that is sepsis diagnosis, where a 1-hour delay in diagnosis results in a 10% increase in death rate. So I think you can see that this nascent company has all of the attributes of being a very successful company. I hope these two examples coming out of Strathclyde University and the information that you've heard from the principal, from Mark Logan, and from the rest of the panel show why Scotland is such an exciting place to invest in, and how Strathclyde is playing a leading part in that new wave of innovation. Thank you very much for listening.
David, thank you so much. Really interesting presentation, and I'm sure people will be particularly interested in the two case studies that you presented at the end there, which really, you know, are fantastic examples of the type of innovations that are addressing problems that are, you know, everyone can relate to, and you can see the very real value of the impact of those innovations. So thank you so much for that. Again, quite a lot of questions, David, so I'm kind of filtering through them to find those that I think are most relevant at the moment. And here's one here. We've spoken very convincingly about learning and investing in ecosystems, but entrepreneurs need investors. So this seems like a question very much for you. How important do you think commerciality is to any startup, and how should this be presented to potential investors? So I suppose this is about, for an early stage business, what do they need to say to an investor? What do they need to demonstrate to secure investment into their venture?
Oh, that's a very good question. As a scientist, I love the science of innovation, but sometimes innovators get too wrapped up in their technology, too wrapped up in their science, and don't present the commercial reality, which is the really important thing from an investor's perspective. And it's a useful exercise to indulge in, I think came from General Electric originally, which is the elevator speech. Be able to convince somebody in an elevator ride or lift ride from the bottom floor to the 10th floor, how would you explain your project and why it's going to be commercially successful? And you should have maybe 4 or 5 attributes that explain to an investor or to anyone else why your potential company is going to be successful. And I think as we saw in those 2 examples, both Orium Diagnostics and ClinSpec Diagnostics have a few key attributes that make them potentially really successful. And they can be summarized as disruptive technology, global markets, growing markets, protectable IP. And those are the starting elements for any investor.
Thank you, David. Thank you. Here's another question here. I am increasingly frustrated by the apparent focus of government support solely on businesses in trouble and an almost complete lack of acknowledgement of the needs of ambitious growth companies. What can we do to change this?
Well, that's also a very valid comment, I think. Companies have a life cycle, technologies have a life cycle, and I think we do need both within Scotland and also in the rest of the United Kingdom to focus more on where the new sectors of growth are. I don't mean by that that governments have got to start determining what those are. The governments are very bad at determining that, but they should support success. And I don't think we've done that in a very creative way in the United Kingdom. I do think there is still an emphasis on preserving the older technologies rather than looking at what's going to change it.
Thank you, David. I have another question here. It's a little on the same theme. How do we encourage and harness more financial support in the current climate to help more entrepreneurs move their ideas on at pace?
Again, I don't think money is limiting for really good ideas. I think I've seen what are really good ideas that aren't presented in a very good way. So a lot of it is actually just thinking about the presentation of your project to investors. That's the first thing to say. There are mechanisms. I think it's a need to understand what you need when starting up a company. Some companies can get off the ground with relatively small amounts of money, and angel investors in Scotland are particularly good. They are well engaged with the universities, and that's a good starting point. Your idea can get off the ground with relatively small amounts of money. You also need to be prepared to put some of your own money in. It shows confidence in your own idea. And if you don't think, I want to risk that, then ask yourself, why should anyone else risk that? So I think those kinds of elements, you should ask yourself that question. I don't think money is limiting after that if you've got a good idea. I really don't think that's the limitation at the moment.
Okay. David, thank you very much. I'm going to ask one final question. It is a popular question in our upvote. Scotland's other startup Who unicorn, FanDuel, was sold at a value of 11.5 billion. But unfortunately, the founders didn't really receive anything for their shares. What can we do to ensure that Scotland reaps the rewards of its entrepreneurial achievements? I think that's such an important question. How do we, if we're encouraging entrepreneurial mindsets, entrepreneurial behaviours, we're generating wealth, how do we keep that in the country?
Yeah, I think that's critical, and it's really one of the things I was hinting at, that Scotland in particular has had a great innovative culture, but so much of that ends up being translated into US companies, which may or may not have the long-term interests of the Scottish population in mind. And I do think we do, and I think the solution to it ultimately is a more robust capital market that, like NASDAQ. I mean, to give a good example, we've all heard recently about AlphaGo and how that was translated now into a company that can predict protein folding, one of the most important technical advances in biochemistry and in medicine. But that company was sold to Amazon Alphabet for 400 million. That company should have been a $1 billion float on a UK stock exchange. And I think where we're lacking at the moment is that element. And that's surprising because both England, in London and in Scotland, we have very robust financial industries. And I don't think we've got to grips yet with, particularly post-Brexit, how we're going to have more robust capital markets that are going to invest in technology. And I do think that's something where government could intervene and foster the correct environment.
Thank you very much for that, David. Really considered opinion on a really important matter. So thank you.